Hey guys, hope you're doing well out there. This is the first of hopefully many videos to come on this channel analyzing stocks, taking a look at their earnings, their revenues, their estimates, and determining if it's a buy, hold, or sell. Today we're taking a look at FedEx Corporation, ticker symbol FDX. We have a $56 billion company here, 2.2% dividend on this one, which is about $5 per share. Over the last year, you can see hasn't done much, and actually over the last 5 years also, the stock has been dead money, but has performed fairly well over the past year to date, up over 30%. We'll see if these trends can continue based on these upcoming financials. Taking a look at their earnings report, FedEx reported earnings about 3 days ago. This video is coming a bit late, so apologies for that. This is their Q4 quarter ended, so FedEx has their fiscal year done a bit differently, where this is the quarter ended May 31st, so financials for March, April, and May, their fiscal Q4, and also the end of their fiscal 2023. So revenue came in at 21.9 billion, which was down 10% year over year and missed consensus estimates by 760 million. So consensus was closer to 22.7 billion. Earnings did beat expectations by 7 cents and came in at $4.94. EPS, not the best judgment of a company's financials. We'll take a look into why that is. It can be manipulated by a few things, such as stock repurchase, which FedEx did a bunch of in this quarter. And so even though revenues are down, you can see EPS has been held steady. They purchased over 9 million shares, or 4% of the outstanding float over the past 12 months. And as of May 31st, $2.6 billion remain under the current share repurchase program. Over the next 12 months, FedEx expects to repurchase over $2 billion worth of more common stock, and announced that 10% dividend rate hike, which we saw, which is now at $5.04 per share. And this is interesting because they are planning on paying $5 per share per year, and they basically earned that, just about that, over the last 3 months. So this company is in a good position to continue their dividend hikes, and this 10% dividend increase can be justified, because if they're doing about $5 in 3 months, they have plenty of room to increase this $5 per share dividend. In terms of 2024 outlook, we can see they projected flat to single-digit percent revenue growth year over year. EPS coming in at $15 to $17 per share. The consensus was slightly lower, so slightly beating on consensus estimates there. We can take a look at revenue projections also over here. So consensus has the next year revenue coming in at about 90 billion, which would be just flat to down year over year. FedEx projected roughly low single-digit percent revenue growth, so if they were to come in with that range, they would be just in line with estimates. Over the next 3 years, very low to moderate single-digit revenue growth expected for FedEx. We can see their EPS is expected to balloon up to $25 per share by fiscal year 2026, and so that's very steady growth in the EPS. And so it's interesting to see how FedEx would be doing this. It would be lots of cost cutting and efficiencies driving in their business, because as you see, revenue growth isn't very strong. However, EPS growth is really good over the next few years, these projections. Another way this can be done is FedEx continuing to repurchase a lot of common stock. As you can see here, they mention cost reductions expected over the next year, driving down $2 billion, roughly $2 billion in costs. Shares on this news were down 5% initially. All right, let's jump into our financials. So here we have our earnings statement, all these numbers are in millions, and they separate it out as a 3 months ended, and because this was the end of their fiscal year 2023, they have 12 months ended on the rightmost column. Comparing revenue year over year, we see there's that $21.9 billion figure, down roughly 10% year over year, down from $24.4 billion. On a 12 months period, this was down 4%, down from 93.5 down to $91.2 billion. Mainly, you can see almost all of their revenue segments contracted, the biggest one being this other, but even FedEx Express contracted 13% down year over year, freight down, and ground segment down. Let's take a look at their operating expenses. So salaries and benefits down just marginally from 7.9 billion down to 7.5 billion. Purchase transportation down substantially, down from 5.9 billion down to roughly 5 billion, which was 17% decrease. So you can see they're purchasing less vehicles and transportation. Rentals and landing fee roughly flat. Depreciation slightly higher. You can see fuel costs driven down 35%, down from 1.7 billion down to 1.1 billion. Year over year, you see this decrease largely due to the reduce in fuel costs as inflation slowly comes down. Overall operating expenses down slightly, just from 22.4 billion down to 20.4. And so you see as revenues declined 10%, they were fairly good in managing those operating expenses, keeping them in line with revenue, down roughly 9%. And so you come down to your operating income down from 1.9 down to 1.5. So as revenues declined roughly 3 billion, you saw that translate right into operating income down roughly 3 billion as well, down 22% year over year. On a 12-month basis, paints a similar picture where operating income is down 21% year over year. And so this right here might be largely the reason the stock had that initial reaction down 5%. And so it's good to look at this operating income number and compare that year over year. Because if we take a look at this net income number, initially you were to see diluted EPS jump from $2.13 per share up all the way to $6.05. On the surface, that looks very good, but that is largely because of a decrease in share price and the difference in net income. However, that doesn't paint the full story, as operating income has declined year over year. Here we can see the weighted average common shares have decreased, which is in line with the fact that FedEx has bought back roughly 4% of their outstanding shares over the year. Right, coming down to the balance sheet, let's take a look at the assets. So current cash sitting at $6.8 billion, same time last year. So current cash hasn't changed too much. Accounts receivable roughly in line. Overall total current assets sitting at $18.5 billion, down just marginally from 20.3 a year ago. Long-term assets and total long-term assets sitting at $87 billion, roughly in line with last year's $85 billion. Coming down to the current liabilities, there's a portion of long-term debt payable in the next 12 months. That is roughly $126 million. All in all, current liabilities sitting at $13.5 billion, down just marginally from $14.2 billion. Overall, not too much has changed in the balance sheet from a year ago. They do have quite a bit. FedEx does have quite a bit of long-term debt sitting on the balance sheet, $20.4 billion to be exact. And so, as interest rates continue to increase, this long-term debt will become more and more expensive as time goes on. And so that is something that's not ideal for this balance sheet, is they do have quite a bit of long-term debt. Coming down to the statement of cash flows. So this is for the year ended 2023. So we have our $3.9 billion net income, which we pull down from right here, our net income for the year ended May 31st. And we add back in things like depreciation, amortization, goodwill. That's not exactly cash leaving the business. And so just the way accounting principles are done, we get to add back in these things. Net cash provided by operating activities for this quarter of $8.8 billion, down about $1 billion from last year, which was $9.8 billion. And all in all, they basically use that cash flow right back into the business in terms of capex. And so you're left with a $2.5 billion expenditure for cash used throughout the year. So not too much change in cash flows. FedEx seems to take all of their cash flows and reinvest it back into the business. In terms of financing activities, we can see they didn't issue any more debt. They did issue a bit more from stock, but they paid out these dividends and repurchased $1.5 billion worth of stock. And the other benefit of stock repurchase is they're retiring those shares, and so they don't need to be paying dividends on those shares anymore. You can see the dividend paid out over the last year did increase year over year. That's largely due to the dividend hike, but because they're retiring shares, they don't need to pay dividends on those anymore. All in all, fairly healthy cash flows. Moving on to the technical analysis, you see FedEx not really done much over the last 5 years. It's trading at basically the same point it was 5 years ago. You can see it had a massive run up during COVID because tons of people were shipping stuff all across the world using FedEx. They had really high demand that they couldn't meet at one point, so it had a positive impact on the stock. And now over the last 6 months, it's done fairly well, sort of trading in between this range, between 200 to roughly $250, 250 to 260, wherever you put that. And so it's right in the middle of that range. I would say I would hope for the stock to come down a bit more, maybe south of 200, before I would become interested in this. Closer to 170, even down to 150 is where the stock would really get interesting in terms of a buy for me. So that is FedEx Corporation. Overall, fairly steady business. You do see declining revenues, but earnings are expected to increase fairly well over the next few quarters and next few years. And so if you believe management can drive efficiencies within the business, FedEx is a steady company, almost an indicator of the US economy and worldwide economy, really. And so as this dividend keeps increasing, it could be a good long-term buy and hold investment. Thanks so much for listening. Take care.